Hello and welcome to another video from Real Tail Trader, and my name's Simon Gray, recording this video pretty early on in the morning. It is 7:30 UK time. I've been up since 6 doing my market analysis and have spotted something quite interesting in terms of an opportunity that I am leveraging to the max, and I'll explain more about that in a moment. Just before I get into the charts, quick caveat disclaimer: this is not an advice service. I'm not suggesting you buy or sell any currency pair. It is for information, I guess entertainment, if you like, purposes only. I'm just sharing some of the stuff that I'm doing. If you're new to the currency markets, it may give you a clue as to how to trade them, and if you're more experienced, maybe some insight as to things you can bring into your strategy, your edge in how you play the game. So please don't follow my advice. The currency markets are a leverage space. If you don't know what you're doing, it's one of the quickest ways to lose your money, so be careful. Anyway, with that said, let me jump in and let me show you what I'm looking at today. I've got a number of trades on, actually more trades than I normally have. I've got 6 trades on currently. A couple of those are protected, which means that I have already made money in them, and if the position reverses, I've made money. I'm going to be stopped out of my entry point, so pretty comfortable with those. Let those run, but spotted a interesting opportunity that I am, as I say, leveraging to the max. And today is non-farm payroll days, so non-farm payroll day, I should say, which means that 1:30 p.m. UK time, the US announces its employment figures. And the currency markets can go pretty crazy. Anything with a dollar in it, any pair with a dollar in it, which is my major pairs here, they can see wild swings in terms of volatility. On I think it was Wednesday, was it Tuesday, Wednesday this week? I think it was Wednesday. We had the FOMC, Federal Open Market Committee, and if you watch one of my earlier videos, you'll see there was a really volatile swing in USD. CHF, so the Swissy, and I had a profitable trade on it. Reversed, stopped me out at entry, but that was something that you can't foresee. Depends how people are trading this. Short-term traders trying to capture some points or pips, yeah. So my rule generally is that ahead of major news events, I try and avoid entering new positions with that currency pair. So today I'm trying to avoid entering positions, even if a signal shows up in a dollar pair, and any dollar pairs that I have currently in play, I will be looking to tighten my stop just in case the market reverses the wrong way in terms of my trade. But anyway, let me get on to what I want to show you. So interestingly, if you look at the pound dollar here, so cable, what you'll see is that prices come up. We're kind of consolidating here. We may get a push back up here. Who knows? On the daily chart, if I look yesterday, there was some downward pressure, but the bar closed. Although the bar closed down, there was some buying came in here to push it back up towards the lower third in terms of the close. If you look at Euro USD. The euro, it's a slightly different story. Look where this bar closed yesterday. So this is the daily chart. Yesterday, this bar closed right at the bottom of its range for the day, and already today we're seeing more downward pressure. Contrast that with the pound, we're seeing some upward buying activity here. So there's a disparity there, I think, between the pound and the euro. Now, on the euro, I had a couple of signals show up overnight, and this is what these lines are here. Now I'm on the 240 chart. What you'll see here is I had my EMA cross strategy. Hopefully you can make out the orange dotted line, which is crossing the pink downward sloping line. The pink downward sloping line is the 50 simple moving average, and the dotted orange line is my 10 exponential moving average. Now when these cross one another based on certain other conditions, that's usually a sell signal for me. That's what I call a down cross. The other thing interesting on here is I get a Y signal here on my euro pair. This happened at 6 o'clock this morning. Now when I analyze the euro in respect to all of its moving averages from weekly, daily down to 240 4-hour, it is below all of the major moving averages and also below the daily 10 exponential moving average. Now, when I get a signal that shows up like that, and I have that, what I call the full house, this is my full house strategy, and normally I would be selling off that candle. So really I've got two very good reasons in line with my edge, in line with my rules, to sell the euro today. And we could see a pushback into parity down here at 1.000. Is that the right zeros? Yep, I think so. But the problem here is this: non-farm payrolls today. I'm going to be out at lunchtime, so I'm not going to be in front of the charts. Even if I was in front of my charts, difficult to trade that. Difficult to be in a pair if it goes the wrong way. Slippage. The market moves very fast. Even if you have a stop loss, you could be slipped past that stop loss and take a bigger loss than you would normally wish to take or had planned to take. So what I thought is, okay, let me jump into Euro GBP, so Euro Pound. So let me jump into that chart. And this is an alternative way to play this Euro USD sell, this Euro sell. So let me try to do two things at once is never good. So let me just jump into that chart and I'll show you what I've done. I'm already in a short position on Euro GBP. I have a trade that's in profit currently, so it's working for me. Here we go. Just let this load a little bit. I'll just explain. This is the 240 chart. I basically sold it here on a trend trade, which is my down cross strategy. I then sold it again. When did I sell it? I sold it here first, then I sold it here, second position. And that was on a close below the 200 simple moving average. Let me blow this up a bit now. Yep, it's loaded. And then what I did this morning, on this bar, I sold it again. So basically I'm selling the euro and I'm buying the pound. Now if you go back to the other charts, the cable and the euro, the pound is showing more strength than the euro. The euro has a full house set of SMAs telling me that it's a sell opportunity. But whatever happens with non-farm payrolls today, because cable and euro, they're set against the dollar. But when I take the cross pair, the synthetic pair, euro GBP, I'm insulated from the dollar. But I'm still betting, I don't like that word, but I'm still saying in line with my edge that I think the euro is weak and the euro is going to go down. It might move much slower, but that's fine. And the other thing that I can show you here is every morning I do some relative strength analysis on the previous day's close. I look at all of the pairs in relation to one another, and what you'll notice here is the pound has a strength of 4 out of 10. The euro has a strength of 0 out of 10. So my daily relative strength analysis is telling me that the pound is stronger than the euro, which is another reason that I would get short here. As I say, the move may not be as quick or as volatile, but ahead of NFP, non-farm payrolls today, it is the better way, I believe, to trade that or to take advantage of weakness in the euro. So short video today. Let's just do a quick. Might as well do a quick roundup of my other trades that I have in play. Here my GBP, JPY long. We're kind of getting stuck under here. Already made money from this trade. Got a profit when I hit this target up here, and got a smaller profit locked in here. So this is a profitable trade. That's a risk-free trade for me now. My other pairs that I am trading, let's have a look. Euro, Swiss franc. Okay, so this was a SMA cross here, down cross. This is also top of a range, so you'll see we had a high here, which if I go out to the daily chart, you can see is a high that's been respected since, well, October last year. If I go into the 240 chart, you'll see we made a high here. We then made a lower high, had a YX reversal candle signal here. So on the down cross, I sold it. So I'm kind of at entry point here. Sold this yesterday on this strong downward momentum here, looking to get down to here to take off half the position. So that trade looks like it may be starting to work. Again, I never know. You never know. All trading is about is managing your risk and taking advantage of opportunities in line with your edge and looking for at least a 2-to-1 in terms of my edge reward to risk ratio. What else am I got on here? Yes, I've got Swiss franc, Japanese yen. Again, this pair tends to move more slowly. It's a synthetic pair. It's a cross pair. I sold on this candle. That's the daily chart. I sold it here on the 240. This was a full house trade, so all the price in relation to the SMAs is telling me down. I'm moving. I test back up here. Tested the 50, rejected off the 50 once, or 3 times. We're now heading down this way, looking to get to my target here. I can take off half the position, roll my stop to break even. Then that's a free trade. May look to add as well if we close below this low here. Jumping out to my major pairs, and just while I do this, Aussie news overnight. I'm going to talk about the Aussie in a minute. Australian dollar, US dollar. Aussie news overnight. Building approvals were down. They were worse than expected. So the Aussie was under a little bit of pressure overnight, but let me show you something quite interesting that I believe is an opportunity on that. I bought the Australian dollar yesterday, and I bought it because it's at the bottom of a range. This 0.7000 even handle has been respected since. This is a bit of an anomaly here. That was what do they call it? Don't worry. This is a bit of an anomaly, not something that I would pay too much attention to. Black Swan event, that's what I'm talking about. Okay, and on the 240, okay, so we had some downward pressure. This is holding for the moment, and I've bought here on the basis that we may get a bounce back up here. Now remember, not all the currency markets are not always just played by speculators. They're played by commercials. Commercials need to buy and sell currency pairs for their trade, for buying and selling, commodities and whatnot. So this range here is a price range that commercials, so commercial traders, people who use the currency to buy product, are comfortable keeping the price, or have been comfortable keeping the price within. So we may see some buying come in here to push back up. I don't know. I have my stop loss here. I'm halfway to my stop loss here. This is where I would reconsider whether I want to be in this trade. As this is holding, we're just below the even handle now. I'd look to see where we get to on the close of this candle, which may tell me to get out, cut my losses short, or to stay in. USD, CHF, Swissy. Let me just show you this. So this is a bit of a frustrating trade. Remember, not all trades are winners. I sold this on a down cross strategy here on this candle. We are now up back here at the top of that candle. I entered here. So this market is a little bit confused. We've been below the 50 simple moving average. We're now back above it. What I did this morning, in line with my rules, although I'm short, I took off a third of my position for a small loss here when the 10 exponential moving average crossed back above the 30 exponential moving average. I'll then be taking off parts of my position if we start to move higher before my stop loss is hit, to try and reduce my overall loss. But of course, we may see a push down. We've got non-farm payrolls later. I will stay in this trade. And we'll see where we end up. I know what my loss is. There may be a little bit of slippage, but I'm in the trade. I'm going to hold it and see where we get to. So that's it. So the title of this video is: should I sell the euro ahead of NFP, non-farm payrolls? The answer is, well, depending on what your rules tell you. Maybe you should, maybe you shouldn't, but there may be an alternative way to play the euro trade, as I've shown, using one of the synthetic or cross pairs. So I hope you enjoyed the video. If you enjoyed it, you found it useful, please hit the subscribe button, hit the like button, and you'll be notified of future videos I put out there. Trade safe, and I'll talk to you again very, very soon.